Welcome back to Market Day Report as we approach mid-morning. How are we trading the markets? Let's start with corn first. And in Chicago, up 2 3/4 cents on the December, $4.18 a bushel. We're just half penny off of the day's high. As far as new crop corn, what about soybeans? Well, we're higher there as well. November at 10.59 3/4, up 6.5 cents. And again, the export sales for soybeans, 1.5 million metric tons, more than 50% of that taken by China. The shipments, 518,000 metric tons, so not spectacular, but not a marketing year low either. So again, that's where we are on the export sales. Wheat, however, marketing year lows for the sales while marketing year highs for shipments. 4 cents higher on December Chicago at $5.94 1/4. July 6.28, that's up 4 3/4 cents. Hard red winter wheat 9 higher on the front month at $5.90, just 1 tick off the day's high. July 6.17 1/2. That is the high for the day, up 8 3/4 cents. And in Minneapolis, 5.5 higher on the December, 6.22 1/2. In New York, cotton futures have been higher as December now pushing above 74 cents at 74.07, up 87. Ted Seifried's with Zaner Ag Hedge. Ted, what are you watching?
Yeah, Tony. I mean, it doesn't look like much, but this is the highest corn has traded since July. And if we close up here, it'll be the highest close that we've had since July. It's a little bit of a breakout to the upside. It's causing continued short covering. And you're kind of finding strength sort of commodity wide, which is really interesting, with the exception of crude oil. And that's because OPEC is talking about increasing their output production and giving up on their $100 target for crude oil. So that's putting pressure there. But aside from that, grains are fairly strong. Equities are strong. There's a lot of stuff going on. There's weather that's happening. Obviously, that's a factor, too. With the big storm coming through, there is some concern about some damage with all the very, very strong winds and heavy, heavy rains that will be occurring. And we continue to worry about what's happening with the dryness that's going on in Brazil right now, although their forecast has gotten a little bit better. So we're strong for the moment. The charts look really good. I keep wondering, though, if we're going to see bigger hedge pressure, bigger cash sales putting pressure on the market here at some point. So I really do like the idea of producers taking a look at protecting the downside.
You mentioned the strength that we've seen in corn, soybeans, wheat, even cotton month over month, but we're not seeing that same strength necessarily in the cattle market. So let's take a quick break. We're back. We'll talk livestock futures after this on Market Day Report. It's Market Day Report. And let's start with live cattle. In this segment, we are lower now. October off 42, 182.62. The December is down 37 at 183.95. For the year, live cattle down 2.9%. For the month, though, the week, 2.6% gain. What about feeder cattle? This has been another one that's kind of interesting. It's up 0.9% for the week, slightly higher for the month, but still down nearly 5% year over year. October feeders at 245.37 off 65. And maybe the shining star in the livestock market outside of milk has been hogs, just continuing to grind higher, but up 14% year over year, even though October trades 67 lower at 81.80 and $1.22 lower on the December. We get a quarterly hogs and pigs report out this afternoon. Let's bring back in Zaner Ag Hedges, Ted Seifried. And Ted, what are you watching in the proteins?
Yeah, like you said, we are a little bit lower on the day in the cattle complex, but we are well off of our lows. And, while we are going to say that this is a higher day for equities, and a lot of times the two will go hand in hand. When you have higher equities, that means more confidence in consumer buying, especially higher price cuts of beef. And we have higher cattle. Well, okay, that's not the case today. Again, well off our lows. but we've also been very overbought in the cattle, so this is just, we've gotten over some very key resistance levels in the form of our major long-term moving averages. I think we're just taking a little bit of a breather here. You also mentioned that we're down year over year, but imagine where we're coming back from. I mean, we are well off the lows that we had, the double bottom from August to September. It's been a really, really nice bounce, and so those numbers of being down year over year were a lot worse a little over a month ago. They've really improved. And the question is, do we continue to go higher or not? A lot of that really depends on what our outlook is on the economy longer term. And we've got a very tumultuous time here at the moment, Tony, with elections and everything going on in the rest of the world. So we shall see. But a lot of the strength today, and I meant to say this when we were talking about grains, is coming from China. China introducing a stimulus package that is, giving us ideas that they're going to buy more of our commodities and maybe help the global economy. So that's helping some things out too.
Yeah, perfect point, Ted. And I'll end it with this. By the way, thanks for popping in today. According to J.D. Power, new vehicle sales in September are projected to fall 1.8%. The annualized sales now at 15.8 million units. Why is that important? Well, transaction prices are expected to fall nearly $1,300 per unit. They're increasing the incentive spend per vehicle, and interest in EVs are now at a low point, down 4.2%. So